My name is Ann Cunias, and I'll be your host for this session. Our presenter this evening is Susie Artsberger. She is the Vice President, although it says Director right there. You're a Vice President, Susie. You need to update your slide, of the online stock tools, information technology, and data at Better Investing. In that role, she leads the team that develops and continuously improves these powerful stock tools. And most importantly, she is a regular user of these tools to help her manage her own stock investments. So that's enough intro. I think everybody's anxious to get started, Susie, and learn some more about using SSGPlus to analyze our stocks. Take it away.
Thank you. And thanks for everyone for coming out today and spending some of your valuable time with us. Thank you to our backroom staff, Linda and Marcia and Ann, as they do a great job of helping to answer some of the questions as we go through our webinar. So let's get started. This is our standard disclaimer that you may have seen before in other webinars. This webinar is for educational purposes only. We will be talking about a particular stock tonight as we learn SSGPlus. I do not own the stock that we will be looking at, but it is on a watch list of mine. Regardless, you need to do your own research. Don't go off and buy a stock on the basis of a product demonstration like this. You may also see me link off to other websites as part of our integrated research feature. I am using those websites to show you how to research and using those links and to help complete our demo SSG. Those sites are not necessarily endorsed by Better Investing. Our session is being recorded for future use and will be posted in our members-only video learning library on the website sometime on Thursday. I will say though, it's also posted on YouTube, so if you subscribe to our YouTube channel, which is youtube.com/betterinvesting, you'll be notified when any new videos come out, and this will be one of them. So in today's webinar, we will provide an overview of SSGPlus, including how to access it and use its basic features. However, this is not an in-depth discussion of our stock selection guide methodology, because there's a lot to unpack with that. You will see the methodology in action as we move through an actual stock selection guide demonstration in SSGPlus, but we won't spend much time explaining how we came up or I came up with my forecast, because the emphasis is on how to use the tool, where to click, where to enter numbers, and so forth. Those judgments are an important part of the SSG, and we have lots of other resources available to you if you are wondering how to develop your own judgments. The last page of the handouts contains helpful resources. And our guide for the webinar is what we call our Quick Start Guide. It's available as a handout, and the handout can be downloaded from the GoToWebinar control panel. And when we post the webinar on the Better Investing website, we'll also post these handouts. And if you have any questions along the way, please, please, please feel free to submit them with your chat or question panel in the GoToWebinar interface. And we usually get to most of them during the webinar, but if by chance there's any left over, we'll try and circle back and answer you by email after the webinar. Tonight we're going to be talking specifically about the SSGPlus tool, but it is actually part of a larger suite of tools, and we have tutorials for each of these. Core SSG, up at the top, is a very similar product, with the main difference is that Core leads you through the SSG step by step. It is best for people new to the stock selection guide methodology. SSGPlus has a faster workflow where the basic data and calculations are on just 2 screens. The third major portion of the tool suite is the stock comparison guide here in purple. Fourth and fifth are the screening and stock ideas tool, and then the portfolio tools. All stock tools automatically integrate with Morningstar stock data. There's no extra fee or downloading to use the data in the tools. And with the stock tools, the Plus membership includes a plethora of web-based webinars and self-paced classes and a company research page. And remember, no matter what tool you use, Core SSG or SSG Plus, it's the same basic methodology. They use the same data, and you will get the same results out of the process. So you can switch back and forth between those tools if you so desire and have access to both Core and Plus. I'll demo that when we go live. Let's give you a little bit of an overview of that quick start guide that I mentioned. And this is what it looks like. If you happen to attend an in-person event, you may be able to pick up a nice printed copy of one of them, especially if you go to our national convention in Chicago in April. We'll always have a whole bunch of quick start guides and the opportunity to talk one-on-one. The one you're going to download from GoToWebinar is a bit easier to print out, and it fits on a regular sheet of paper. We have a number of quick start guides available, generally one for all of our products, and they are an easy step-by-step way of getting from start to finish in a particular tool. So, for example, this SSG Plus Quick Start Guide gets you through doing an SSG in 8 steps. And that's exactly what we're going to show you tonight. The guide is always available in our Help and Information tab, and I'll get to that when we're live in the tool. And these are the 8 steps that we're going to go through: how to access, how to open a new or saved study, how to visually analyze history and quality, how to review peer data, how to forecast your sales and earnings, how to review PE history and forecast your prices, how to review your potential return, and then finally, how to save, share, print, research, do some extra things, and look at some of the extra tabs that we have in the tool. So what we're going to make sure you at least know the basics of these 8 steps. So to acclimate ourselves and how to access, I'm showing you a screenshot from our member homepage. The links to the online tools are up here in the right upper gray box labeled Online Tools. The Stock Selection Guide is the primary tool we'll look at tonight. If you want to access that tool, enter a ticker and click the green Go button. The blue magnifying glass is for our screening tools. The SCG is for our Stock Comparison Guide. CR is for our company research, and the question mark goes to our tools help page. Again, this is a blow up view of this. I've entered a ticker in the white box, and then I'm going to click on go, and then we'll continue on to our SSG Plus. Now, if you have SSG Plus, it's likely you will open up and see this view. If you don't, if your screen doesn't look like this and say SSG Plus in the upper left, then you are not using SSG Plus. And if you have access to both, you'll see this Switch Tools box, and it will likely be on Core SSG. So I want you to go and click SSG Plus radio button above the navigation to switch. If you don't see this box and don't see the radio buttons, then you just have Core SSG. Drop me a line in the question box and I can help with that after the webinar tomorrow. So at the top is the navigation. And tonight we're going to be spending most of the time on the first 2 tabs, the ones that say Analyze Growth and Quality, and then Valuation and Return. On all tools, we have the left navigation of tabs to reach the other tools and a menu of other choices in the top right. Here's the menu items. On the Analyze Growth and Quality page, we see in the middle of the page a large graphical display of data. The lines that show by default are the green sales line, the fuchsia pre-tax profit line, the blue earnings per share line, and the black price bars. We have a tabular display of the same data below the graph. I also want to point out the legend here, and we'll look at this live, but this is your key to turning those lines on and off. You click on the individual items in the legend to turn them on or off. Then there are peers, and if you click on compare peers, you'll see data from similar companies, and then we'll go through that live. There's a projection line starting point up here and recent quarterly figures and analyst consensus estimates. There's also some management and evaluate management figures below this view, but this is got a lot going on, so we give you an introduction to it. So we're going to go live right away. Ann, any questions before we go live?
Not at this time, Susie. We're clear.
Okay,
Let's go.
here we go. Oh, I guess I better go live before I end the webinar. Okay.
Please.
We'll get there. All right, I have on my screen, let me make sure everyone's seeing it, the Better Investing member homepage. How do I know that? Because it says online tools at the top, and it has my name. It will say your name if you're logged in, but I am logged in. It will also say my account. That tells me I'm logged in. And on the member homepage, we see this online tools box that I talked about. So here's where we're going to access our new study, and this is live. So I am going to enter the ticker, and the ticker is EXLS. If you don't know the company name or ticker symbol, if you don't know the ticker symbol rather, you can start typing in the company name, and that works also. So I'm going to select this one, and it just resolves to the ticker symbol, and I'm going to click on go. And in a separate tab, it will open up my SSG study. And again, for me, it opens in SSGPlus. If for you, it opens into a view like this that says Core SSG in the upper left, you're in Core, but we're going to demo Plus tonight. So there's SSGPlus. And shockingly, this view that you're looking at looks a lot like what we just went over from the slide deck. Here's the front view. We're on the Analyze Growth and Quality tab. We know that because it's green. Here's that Valuation and Return tab, which is the second most important one we're going to look at tonight. Here's the left navigation, and we know we're in the SSG tool because green is highlighted here. So what else do we have going on? We have those menu items in the upper right. Feel free to explore those. We have extra tabs. We have 5 extra tabs beyond the first 2. First 2 are really about the stock selection guide methodology. The last 5 are extras. We'll cover those at the end. Working our way down, we see the name of the company. If I take my cursor, my red arrow cursor, looks huge to me, but it probably looks tiny to you. That's a Microsoft issue. But I mouse over, I'm moving my cursor now, I mouse over the name Excel Service Holdings, and a panel has popped down with a lot of extra information. The current price, the last fiscal year, when it ended, so we can see this company ends in December, the sector and industry. This company is in the technology sector in the information technology services industry. It is a medium-sized company, which means This last fiscal year of sales is somewhere between 1 billion and 10 billion. It's got a Morningstar financial health grade of A, which is the top 10% of all companies ranked by Morningstar for financial health. So I like seeing that. And then a description of the company. And they are a business process management company, and they provide all kinds of computerized, they call it digital operations, and analysis or analytical services to clients, usually in the enterprise space. They've got deep experience in analytics. They are growing in AI and machine learning and cloud. They have more experience in cloud. So they provide, they're an outsourcing service, and they're a US company, but they've had their roots in India, but now they're headquartered in the US. They still have a lot of their labor in India, however. So you can outsource a lot of your business processes, like doing reports, doing accounting, doing some of your technology, websites, things like that, all kinds of computerized stuff. Most of the revenue is earned in the US, and more than half of its revenue comes from the analytics. So I've given you more than you probably need to know for a demo here, so I will move on. Across to the right, there is a quick navigation bar. If I want to move to a different company, I can click on quick navigation and put in a new ticker or search my recently saved studies and call them up. There's a little slider here. So that's what quick navigation does. And then let's pay attention here to this graphical area. And you might see me moving around and things popping up. So that's one of the first things we notice, is that if I mouse over a data point, you'll see the corresponding data. But what are all of these data points? We see, I can hover over this whole line. Green is sales. Well, Q here is the hover, says sales, but it's green. And if we go over to the legend, it says sales there. If I click on sales here, that green line goes away. So that's another clue about what that line is. And then we have a straight line that's through the middle of the data. And what that is the trend line. And if we look at it for sales, if you will, that it's always a straight line, and it is the best fit between all data points. So that's the trend line. Otherwise, sometimes we call it the growth line, but it's really just a trend line. Then we have open circles, which are, you can see light pink here, or fuchsia, we blue open circles at the end, and those are quarterly data. Remember we talked about the company's fiscal year ended in December 24. Well, what's reported here are the 2 quarters after that. So the March quarter and the June quarter are showing in the data. Now it's September, so September, end of September would be the next quarter that would show up. So we are in earnings season, and that's when a lot of earnings reports come in. So I would expect it wouldn't be too long before we see a third open circle here for the company's third quarter, representing their September 2025 quarter. Then we have large shaded circles here, and we mouse over and see that they're called detailed estimates. And we see that there's a corresponding legend item for sales detailed estimates, which I turned off. And now will turn on. Earnings per share detailed estimates, which I turned off and will turn on. And they represent short-term ACE or analyst consensus estimates. If you want to see the detail behind it, you can go to data and detailed estimates to see that, and how many are a number of estimators and who provides them. Similarly, we have analyst consensus estimates over here, and we see that they come from Morningstar. That's also listed in the detailed estimates. And 2-year sales estimate is 12.2%. the earnings per share long-term estimate is 15%. That's actually already represented on the graph here by a thin, lighter colored line. And that is sale or earnings. I'm mousing over right now. At a 15% growth going out 5 years, that's what it looks like. Goes out to be $2.43 of earnings. On sales, here's the estimate line. And because both the detailed estimate and the 2-year estimate are essentially the same, I would expect that the thin line goes right into the second dot, and it does. So shaded circles are estimates, thin lines are ACE estimates also. So what are these dotted lines? That's your estimate. That's your projection, your estimate. Once you enter your forecast, those will change. And when we get to forecasting, we'll show you what that looks like. So dashed lines, or dashed rather, are your estimates. The other thing that we can do here are we can move data. We can move some of these lines around. We just grab and move if it's going to be drag up or down. We can move those. If we drag it up, the graph will adjust and show us the right. It'll give us room. You can't drag it off the page. If we want to reset the chart to how it was when we came in, we're going to click on Reset Chart, and then the whole graph will be rescaled appropriately. The black lines are price bars, the high and low for each fiscal year. And if you mouse over, you can see the data. And so for 2023, we see the low price was $25.17, the high price was $35.82. But here we have one that's hanging out after the last annual data. And what that is our 52-week high and low with the current price notated. So the current price as of last night is $40.48. But we can see the last 52 weeks, we're kind of near the bottom of the last 52 weeks. And the 52-week high and low, we can mouse over that and see the price has ranged from $38.36 to $52.43. But visually, I take a look here and I see, oh, we're hanging near the bottom of the 52-week high and low. So that's something you can do visually. When you are looking at this graph, I'm going to scroll down a little bit by using my right-hand scroll bar. Scroll down, and we can bring up that fundamental company data, which is the same data we see up here. So for example, I can mouse over 2020 and see sales were $958, and here's 2020, and sales were $958. If you like seeing data in a grid or a table form, this section is for you. One thing you can do if you feel data is, how do I want to say this? It's an outlier. It doesn't fit with the rest of the data. It may be an anomaly. Some people take those outliers out. I suggest that you only take something as an outlier if you know why it happened. So let's pretend I know why the pre-tax profit went down in 2018, and I know it's not going to impact. If I click on the year, it takes out the data. We don't see a dark circle, and the dots connect from 17 to 19. Over in the table grid, we see these lines are crossed out for any outliers that have been taken. If I want to restore it, I'm going to click on the year. The program will respond, and I see that the numbers are restored. One thing that's interesting, let's take a look at 2017, because the additional items on the table grid are growth rates, and these represent those straight lines. So if I took 2017 out as an outlier, right now earnings per share growth rate over those 10 data points represented by that straight blue line for earnings was 18.8. If you take out an outlier, your growth rates are going to change. 17.9. So just know that. They will dynamically update your growth rates over here. Likewise, what you can do is just take out like historical pre-tax profit. You can take out one cell, and that's, I haven't taken out the whole year, I've just taken out one cell, and it's missing here for pre-tax profit in fuchsia on 2018. The growth line adjusts, and pre-tax profit growth rate has also adjusted. If you click again in the cell, you can restore that outlier and your growth rate responds. Here's the forecast boxes to enter your sales forecast and earnings forecast. We're going to come back to them because what we really want you to do is take a look at next at the management indicators before you go on to forecasting. You're going to do some research when you're forecasting, and we want to make sure that the company passes some initial quote-unquote tests before we get there. So what we're looking for here in the methodology is that if lines are generally up, straight, and parallel. Now I love seeing that they're straight, up, and they look like railroad tracks. They're relatively parallel. We do see some foibles happening in 2018 that are worth investigating. And again, I'm not going to get into that tonight because we have a lot of things to look at. So we're looking for this relatively up, straight, and parallel. And we're looking for enough growth. This is a medium-sized company with the last fiscal year sales being 1.8 billion. So it's just kind of eked this way into medium-sized company. And for medium-sized companies, per our stock selection guide handbook, we're looking for some, Ann can always correct me if I'm wrong, but growth somewhere between 8 and 12%. And we are 12.5. So this seems acceptable. Earnings per share growth rate over this time period is about 18.8%. So enough growth. Now we're going to look at management indicators, and we've put the management indicators on the bottom here, and because we're looking at everything you want to look at before you start forecasting, and put all these data points together. So we're looking at 3 different types of data: percent pre-tax profit on sales, and we have the data in a table format. We're really looking at the last 5 years, and what we're looking for, here's the 5-year average also, and what we're looking for is if the pre-tax profit rates are relatively stable, if not increasing. Increasing is good. They are increasing. We compare the last year with the average. It's greater than the average. The trend is up. If I mouse over the graph, there's 2 ways I know that it's good. The trend words say up, and the graph is green. If the graph were yellow, that would be stable. That's also okay. If you're not seeing this graph, you're going to go up to the top in those menu items and go to Tools and Preferences and change that Trend Display under General Preferences to Graph. If it's not, if it says text, what you'll see here are the words up, up, down. Down is good for debt to capital. We want less debt. So again, we're looking for the most recent 5 years. We're seeing if the trend is generally down. Here's the 5-year average, 29.2. The last year is less than that, so that's good, green, down. The middle value is return on equity. Same concept. We're looking for stable, if not increasing. Return on equity, we're also kind of looking at an absolute value. That is high teens or greater. So here we have an average of 18, but it's been over 18 for the last 3 years. So that is an increasing trend. It's up, it's green. So Visually, it's very easy to see when I look at this company. I've got relatively straight lines, I've got growth, I've got my management indicators that are green and up, and if not stable, they're increasing. So that's what we're looking for here. However, I do want to point out that debt to capital and pre-tax profit on sales can be and should be compared to the industry or their peers, because some companies make a decent amount of money profit on their sales. Whoops, you can also take outliers here as I'm showing you. And some industries don't make as much. So things like grocery stores, they don't make as much profit. So their pre-tax profit numbers are lower. Now, how do we figure out if this is in the realm of what its peers do? This is an excellent use case for clicking on compare peers. And it pops up this big graph where we see that EXLS is compared to others in the same industry. Now, I'm not a huge, well, I don't recognize, I know who IT and Gartner is. They provide, they do provide consulting. They provide a lot of data for companies, but they're not the exact same company. There's a lot of companies in this information technology services. So I did some research. So work with me here. How do we find out what companies to replace it with? Because these are all, because they're pre-chosen peers, they are in the same industry. They are of the same size. Here's the sales. They're all medium-sized companies in the information technology industry, and that's okay. But I want to be more specific. I want companies that are, excuse me, are closer peers, let's say, competitors. So a couple ways to do that. We can use our research links up here at the top and research peers. I did two things for this company. I looked at company summaries, and one place I went to was Morningstar. It opens in a separate tab. We see Morningstar's information page or company summary page for Excel Service Holdings. And I'm scrolling down on that page, and there is a section called competitors. So I recognized and I chose Accenture out of this. And one of the reasons I chose them is they also have a financial health grade of A. And then I'm going to go back to my original tab here. It's the second tab in my browser. Bring back my SSG. Nothing has changed. It was just stayed static while I went away and did some research. I'm going to go back to research, look at a different page, and I'm going to look at Yahoo. And in Yahoo, it's going to bring up the company summary page for Excel Service Holdings. Actually, it's bringing up their profile page. And if I scroll down there, they have a section called somewhere here, come on, related tickers. And I pulled out Genpact and Cognizant. And what I did was I just wrote these tickers down. I opened them up in another SSGPlus tab, and I looked at to see if they were also up and straight and of similar quality. There's a couple ways to do this. So one of the other things, and if you know me, I love my Edgar SEC filings. In the 10K, which is the annual report, I can go right to that page in the Edgar filings. I can look at the latest filing, which is at the top, look in documents, choose the largest document, and I am going to open that as an HTML file to stay out of trouble because they can be overwhelming for my computer. I'm going to use Control F. I'm going to go and put in the word competitor and find that the company has a section for competitors. Competition, they call it. Competition. And they name their competitors, Accenture, Cognizant, Genpact, which are the ones that I'm going to choose as peers, but I could have chosen from IBM, Infosys, and a number of others. So I'm going to close these tabs out, go back to my Excel Service Holdings and put in compare peers. I'm going to get closer peers, the ones that do pretty much the same thing. G for Genpact. And I put the ticker symbol in, but if I don't know the ticker symbol, like Accenture, I can just start typing the name, find out it's ACN, and then the last one, I'm going to type in Cognizant, which is CTSH. So you see what I did. I just clicked in the box, erased what was there, and then typed in either the ticker or the name and chose the right company. At any point, you can click on Update Study to pull in new peers. How do I know they're pulled into my graph? My legend has Genpact, Accenture, and Cognizant. Now, if I look at my sales here, I see that Excel Service Holdings is a medium-sized company. Genpact is a medium-sized company. Accenture and Cognizant are large-sized companies, and we can see that on the graph. They have much larger sales. Let's see, we were talking about pre-tax profit though. So let's go over to our pre-tax profit and sales tab and see them all together. And where it was 5 years ago, a great deal of disparity between pre-tax profit on sales, now they're kind of hanging together. And in terms of 15.6 for Cognizant, 15.4. And so I'm mousing over that data just like I did on the main graph of SSGPlus. And I see all of these different companies are really kind of in the realm of very similar. Accenture looks like is in orange. Now I can turn off to get a better view. And Excel Service Holdings, one thing to note here is pre-tax profit margins have been growing for Excel Service Holdings. Accenture has been kind of staying stable. This last column here represents 2024, or the data we see aligning with the number 24. And we can do this for all of these. We can look at peer comparisons for earnings, for pre-tax profit on sales, which I find particularly useful, as well as debt to capital. And what we see with debt to capital is that Accenture has less debt to capital. Excel Service Holdings has more, but it's generally trending down. It came back up between 23 and 24, but has come back down again. So this is where you can find, the quarterly data for how the debt to capital has been going. In general, Accenture has less debt, but Excel Service Holdings has acceptable debt. We're looking for something 33% or less. And so this does not bother me at all, and it's acceptable. It's also trending in the right direction, meaning down for debt to capital. Okay, so I've done some work. I think it's worth moving forward. I'm going to save the study. And when I save it, I'm going to go back up here to the top. And by default, the name is the ticker symbol and today's date. And I can erase all of that and put in any name I want. I'm going to click back out because I actually like ticker symbol, date, and I'm going to put in webinar. Now, when you're saving studies, you can save them directly to a portfolio. And I have a number of different portfolios. So let's say I thought this company was intriguing. I'm going to save it into my watch list. I could save that right there. I actually have one in here. Remember I said this was already on my watch list? I could replace the one in there at the same time, but I don't want to do that. I'm going to save it to my test. And there's nothing to replace. There's no similar EXLS to replace. And I'm going to just give it 0 shares because it's just a test portfolio. I'm going to click on save. So now my study is saved. And all right, with that, we are going to start forecasting. And before we do that, do we have any questions?
Well, we do have a few questions. One was about save, and I think you answered it because she was asking, does click to save overwrite a previous study? And you explained how it's possible, but in general, default is no, it's not going to, right?
Correct. It's actually not possible to overwrite another study. It's always going to create another one. You can replace it in a portfolio, but let's say you displaced the previous one from the portfolio, it's still in your account.
Okay, so, I misspoke then. It never replaces a study. It's always making a new study.
Correct.
When you save.
Correct.
Okay, hopefully that answers Jane's question. We have a question about scaling on the graph.
Okay.
Can you explain a little bit about the scaling? Because this man Ben is observing that, you know, we've got things in the millions graphed right next to things maybe in single dollars. So how does that work?
Right. So it is not, funny story. We started out with scaling things exactly on the graph when we first launched the tools, and people flat out hated it. It made everything look flat. So data is scaled such that it covers between 1 and 2, by default, 1 and 2 decades in this semi-log graph. So the numbers are scaled behind the scenes, but when you mouse over, you see the numbers that are in the table below. If you're really, you can move data down if you'd like, but there's really not, and you can see how things flatten out a little bit. We find that most people are uninterested in exact scaling between, you know, 1.8 billion and $1.21. We really want to see, I've just reset the chart. We'd like to see them close enough together to see that sales are important because they drive earnings. So you need to have sales. So we like to see these lines parallel, and we need them with sufficiently close together to be able to analyze that. Hopefully that explains somewhat our methodology behind what we do here with scaling.
I know, I hesitated even at, it's a complicated question, but yeah, we're interested in those trends, and we can read all kinds of stuff on that graph without the numbers, I'll tell you. Yeah, let's go on to this next question. Oh, who is it? Cindy is asking, how do you turn off those extra circles on and off on the graph? I think she's referring to the detailed estimates.
Oh, great question. Yeah, I really didn't cover that. I mentioned they were detailed estimates. You can turn them off, same how you turn off everything on the graph. We can turn off sales detailed estimates and earnings per share detailed estimates. And then you still have your analysts' estimates in the thin lines, long-term analyst estimates, and your dashed lines, which represent your forecasts, which right now are 0. But the detailed estimates get turned on and off here in the legend.
Very good.
Okay.
Got it. What do the diamond-shaped icons indicate? Yolanda is wondering.
Oh, good observation, Yolanda. I mentioned that your estimates or forecasts are the dashed lines. They are just the end of the dashed line. They are actually draggable. You can move them up, like, and I don't know if you can see, but look where the mouse over is 5.6%. That represents 5.6% growth. So I could move earnings per share up. So it's about 10.3% growth. And when I do that, I'm actually making a forecast. That's not the primary way I make forecasts, but they do work if you want to drag them. So I'm going to cancel those and they're going to go back to zero. But short answer is diamonds are the end of your forecast line. And they will move up after you make your forecast.
Okay, one more. Marianne made the observation that sometimes she sees the graphs be red in the trend for the management area. And could you explain again why some of those graphs would be red instead of green, like we see here?
Green is good. It means up. Yellow, they may be yellow, which means even or stable, and that's fine, totally fine. Red is when your trend is in the wrong direction. So if this pre-tax profit on sales graph were red, you'd want to figure out why your pre-tax profit on sales was declining, because that's not the direction we want to go. Return on equity, same thing. We want even numbers or up numbers are good in green. Even numbers are stable and the graph will be yellow. Trending in the incorrect direction, the color will be red and the word will be down. Except it kind of reverses, you know, it's kind of opposite when we're talking about capital, because we're talking about debt to capital. We want less debt. Trending down is good and green. Trending up would be not ideal and it would be red.
Okay, that's it. Let's move on. Thank you.
All right. So we're going to start forecasting, but this is not a judgment class. I know it's going to take us an hour to get through this, but we're going through things fairly methodically and explaining every little thing. You're going to do an SSG after you get about 5 or 10 under your belt, and you're going to go through this fairly quickly. Except when you get to forecasting, you're going to want to do some research and go and read about the company some more, what they do to make money, who their competition is. Are they going to grow in that space? Are they, you know, if you're looking at a retail or a restaurant, are they going to open new stores, something like that? So you're going to want to do some extra research. And let's say this company is acceptable to me right now. I'm looking at, so the research part is where we're going to be very lightweight on tonight because it's not a judgment class. If you're interested in how to make judgments, we have our introduction to the SSG series. We also have our adding judgment webinar series that you should check out in the video learning library. I have already done my research on this company as it's on my watch list. So we're going to be dealing with my judgments. I will explain a little bit about how I got there. So the green boxes here are where we enter judgments. Everywhere you see a green box is where you're going to enter one. I mouse over this and it says click to enter sales forecast. Well, I looked at the company's history, the historical growth rate. I looked at the quarter-over-quarter figures from the last quarter, and they're at 14.7. I see my ACE estimate of 12.2. So I am comfortable with putting a 12 in here. And I'm just going to type in 12 and click Update Study. I should say that whenever you click Update Study, it saves your study behind the scenes. So I already have my study SSG saved by name up here, which means everything I do from here on out is going to be saved with that study. So I have a forecast of 12%. Now remember I said your dashed line is going to change. See, my dashed line is now not horizontal, but it's got some angle to it, and that represents the growth of where I'm expecting or what my forecast is for growth in the future. The line goes out 5 years from its starting point, which is at the last quarter. And we can see under projection starting point, the quarter is what I've chosen. If I want to start at the last annual, let me just say quarter is what I'm going to recommend for most quality, high quality growth companies. There may be some situations where you want to start your projection from the last annual, which is that closed dark circle in the last fiscal year. And you can see this line ends now at 2029. If I go back to quarter, the line jumps out a little bit. You may have a company that is not so straight, and it might make sense to project from the trend line. So I want you to take a look at the earnings per share light, the dashed line for earnings per share. Right now it's hanging off of the last quarterly circle. If I change to trend, it's going to jump down to the end of that trend line. That's how that works. And if your last year or last quarters don't really represent the trend of the company, you might want to work from the trend line to kind of stabilize things out. But the SSG stock selection guide works best on high quality growth companies, making quarter your default choice. That's what we're recommending. And it is the default when you come into the tool. Okay, now I'm going to project earnings. Earnings can be a titch more complicated. I'm going to enter them here in the greens earnings per share forecast. There's a lot that goes in from how the company gets from a particular set of sales numbers to their earnings numbers. And we're going to go through that. I'm going to enter a number, but I looked at a bunch of different things to come up with my number. And first of all, I'm going to look at history, 18.8% growth rate over the last 10 data points, 42, or almost 43% over the last earnings per share over the last quarter. They were pretty low the year ago quarter. Long-term estimate of 15%. So I'm liking, high teens, mid-teens, maybe lower for this. I can be a little conservative here. But we have some research that we can go to. And looking at research and analyst estimates, this 15% comes to us as an analyst consensus estimate from Morningstar. I am going to take a look at analyst estimates here under research and go to Zacks. They are a whole different set of people than the one Morningstar provides, which we get some different voices in the mix. I'm going to scroll down on their detailed estimates page. That's where I landed. Scroll down, and under percent earnings per share growth estimates, next 5 years, I see 13.9, so a little bit less. I can go back to my original study and double check. It's like sales is at 12, earnings per share is at 15, historical earnings per share is at 18. We can get a 2-year number, sometimes more than that if we look at a couple of other sites. And I'm going to say, well, we can look at FinViz. This is a hot mess of, but when you open up the FinViz, they will show you earnings per share, performance, and forecast. But if I scroll all the way down, there is a number buried right in the middle of the page. This is earnings per share next 5 years at 13.8%. So we're not high teens. The outside community is not leaning around high teens like the historical growth. They're mid-teens, maybe even less. Well, one of the arrows that we have in our quiver is called preferred procedure, and I use that a lot. There are classes on that. Ticker Talk in June 2024, Stock Up in February 2021 will explain this technique in more detail, but we have the earnings per share preferred procedure calculated. If I click on the green box, up comes a big panel of estimate of how to put in your earnings per share forecast. You know, you could simply come up at the top here and put in a number. Maybe I like mid-teens. And then you could be done. You could just put in a number and say update study and be done. I like using the little calculator here, preferred procedure calculation. It's like a mini income statement or a business model. And we work our way down from sales. This is the sales growth rate I chose. We're going to subtract out expenses. We're going to subtract out taxes, any preferred dividends. We're going to subtract those out. In this case, there's none. And then we would get projected earnings for 5 years from now, divided by shares outstanding gives us earnings per share. And coming from where we're at to $2.17 would be 8.5%, which is fine. So doing the doing nothing scenario and no changes into these boxes is 8.5%. However, I noted that pre-tax profit rates were increasing. Here's pre-tax profit margin, and I see that last couple quarters have been robust. Trailing 12-month has been steadily increasing. I'm going to change 13.5 to 15 and click off, and that immediately raises my preferred procedure earnings per share forecast from 8.5 to 10.8. I'm not going to really do anything with taxes. This panel section I'm clicking in on the right shows me the tax percentage that was paid over the last 10 years plus the 2 most recent quarters. So while the 2 most recent quarters show lower, I am not comfortable changing that without doing a whole bunch more research. I might change 24.1 to a basic 24, which really doesn't change my 10.8 at all. I do want to look at shares outstanding because that can be a big change. And if I look at the company's history, I see that they have a history of reducing shares outstanding. So I did do a little bit of research on their recent press release and saw that they had a $500 million share buyback program, of which they were accelerating $125 million. $125 million based on a price of $40 a share is something like 3 million shares. So that might reduce this to 162, 161. I'm going to use 161, and this is just me. I know Ann wouldn't do this. She's like, they often don't go through with their share buyback programs. This is just me. I think companies do, especially when they are announcing they're accelerating it. So I am more inclined to put a few tweaks in here for shares outstanding if I've checked to see that they have an open and active share buyback program. Regardless if you change the number or not, this is the number the calculator comes up with, 11.1. It was 10.8, remember? Those are so close. To me, they're about 11. And so my earnings per share forecast is going to be 11. I just like big round numbers. So all of these things will be saved when I update study in case I want to see when I come back, but I'm just directly typing it in. Note that the analyst estimate is 15%. Some of the other ones were high 13s. So I suspect they're accounting for even more increases in pre-tax profit margin, and potentially they're accounting for more share buybacks than I am. So I feel good. I feel conservative enough. I'm going to click on Update Study. And all of the numbers on that page are going to be saved for the next time I come in. If I click on it again, I see all of those same numbers. So my estimate says in 5 years, this company might make $2.43 per share. Keep that number in mind. It's also listed on this page here. So we are done with sales and earnings projections. And then moving on, before we go to valuation and return, Ann, do we have any questions?
No, not at this time, Susie. We're ready to move on.
Okay. So we go to the valuation and return page. And we have section 3 at the top, which is about price earnings history. We're taking a look at PEs here. Price earnings ratios are how we value stocks. They're one of the primary valuation metric that we use. And we say that a company will kind of either we'll see a trend or will revert to the mean of how it's been valued by the market in the past by looking at PE ratios. Then, just conceptually, we take a high PE ratio times that high earnings per share estimate to forecast our high price. And we take a low PE ratio, it's the most common method, times the current or low earnings per share to forecast our low price. So let's look at that. What do the high PEs look like? I'm looking at 5 years of PEs. The average of 5 years is 38.9. The current or trailing 12-month PE has been a high of about 36.4. So it's a little bit lower. I can see a visual of that. And frankly, there's some bumps in how the market's been valuing the stock, but not any definite upward or downward trend, in my opinion. And what I'm looking for is a reasonable number. So what I have chosen is a number that I'm going to use is about 37. I can look at the 10 years. There's a button here to see what the 10-year average is, and it's about 38. I'm feeling pretty good about my 37 that I've chosen. On the low PE side, the average is 22. And the 10-year average, if I click on that, is about 23.7. And I have chosen to go with 23. So when I get down to evaluating risk and reward, down in section 4, and 4A is high price. I'm going to click on the green box because that's where I enter forecast. And I'm going to enter my high PE forecast of 37. And I can click Update Study, or I can click in another cell and see it calculate with a potential high stock price of 89.9. I click on Update Study. The other green box here is about selecting low price, and we have a number of different reference points or options to consider. The most common option we'd like you to take a look at is what we call 4B, the A option here, and where we take our low PE forecast of 23, and I tabbed over, and my low earnings per share forecast, which is the same by default, is the trailing 12-month of earnings. And that comes up with a forecast low price of 33.1. Now, I have some reference points for that 23. I looked at the historical data. Here's that average low for 5 years. The current PE is 28. So I'm forecasting lower than the current PE. I have a number of recent price lows here. In 23, it was $25. In 2024, it was $28. 52-week low is $38.40. The average low of the past 5 years was 19.8. I'm going to take a look at the forecast low price of 33.1 and comparing it to the 80% of the current price to account for normal market fluctuations. I could put 22 in here and it would be a little bit less than that. Either of those are pretty reasonable. And that's what you're looking for here, reasonable numbers. And I'm going to click on, when I've made my decision, I'm going to click on Update Study. I want to cover one last option here. If you just want to simply type in a low price stock forecast, you can do so and say, oh, maybe you think it's 30. I'm going to encourage you to take a look at low PEs, however, as your primary method, because the market tends to pay attention to PEs also, and we recommend that as your number one choice. So I made my choice. I'm going to click on Update Study. Now, this company, there is one more judgment point, one more green box. I'm going to skip down here and see that there is a payout judgment. This company, however, does not pay a dividend. I'm going to scroll back up and show you in columns F, G, and H are all about dividends. We see zeros, which means 0% of their earnings are paid out. That's what payout is, as dividends, and their high yield, which is just the term for dividend yield. The highest yield is still zero, so they haven't had a dividend. So we only have 4 judgments in this stock selection guide, and we have completed them. Now, when we take a look at section C, we're looking at, here, let me blow this up. I should have done that. We can see a visual of where we have a zone of buy, hold, or sell zones. And we take from our low forecasted price of 31.7 up to 89.9, which is our forecasted high price. We divide it up into 4 sections, put 2 of those in the middle, 25% at the top and 25% at the bottom, and lay out our current price on that. And by the math, this company, using that math and using our forecasts, your neighbor's SSG may not look like this. So these are your forecasts, or actually they're my forecast, of course, but it's in the buy zone. If you want to know the exact math, here's the math. Forecast high price minus the forecast low price, and that's the range, at 25% of the range. And it shows you the zones. So it's in the buy zone. Then there's how far into the buy zone it is. And we were looking for at least a 3-to-1 number for the potential gain versus risk or loss. And that gives me a 5.6. And if you're interested in the math, here it is. So that's 5.6 to 1. Beats my 3-to-1 goal. So I'm happy about that. Up at the top here, there's actually a very quick indicator of the fact that it's in the buy zone, your forecast high and low price, the current price, your potential, your upside downside ratio. And then we're going to skip over potential price appreciation is not compounded. So that's just a straight line price appreciation. So I'm going to look at the 5-year potential at the bottom. 5A for yield doesn't mean anything because this company does not pay a dividend, so it's 0. There's no payout forecast to be made because the company pays out 0%, which is what's defaulted here. But I can see, and the average yield doesn't mean anything because the company doesn't pay a dividend. I can see the compound annual return, assuming the stock is purchased at yesterday's price or a very similar price and reaches that $89 in the next 5 years, you may realize 17.3% return on the money. And then there's an alternative, more conservative forecast percentage that I frankly don't use. I've got conservative numbers everywhere in my portfolio, in my forecast. But this is the compound annual return using the forecast average PE is if you purchase the stock at yesterday's price and it goes up to a high price that's much lower using the forecast average PE. I know that's, let me show you. Remember up here when we made our high price, and this was the average high PE we put in there, 37. The forecast average PE is lower. It's about 30. So it gives you a lower high price and theoretically less, a more conservative return estimate. I'm going to say to you, use one or the other. And my preference is to use the total return based on the high PE. Your mileage may vary. You can be, you might see this differently in that you'd rather use the more conservative number. We give both of those to you. All right, then I'm going to show you another feature that is member sentiment. When you are all done and you want to double check your forecasts, we have a feature, and for this company, we have a feature that's specific to each company under study, and it presents the numbers that the community has estimated. So sales, there's a 12% growth rate median, earnings per share, the community estimated 14% as the median. There's quite a number of estimates here. Total studies is about 200, 209. Take out some outliers. We're looking at data from 155 different forecasts. And these are all from the last studies completed or updated with new judgments in the last 90 days. Please don't start here. Please do your own research. You can see I'm much more conservative than the community. Not much more. I was 11% for earnings. My high PE was 37. The community is a little bit lower. My low PE was 22, and pretty much right on with where the community was. Payout should be nothing because the company does not pay a dividend, and the community return is about 16.7. That's not too far off of the 17% that my 17.3 that I came up with, but please do it as a double check. All right, any more questions before we look at some of the other things and wrap things up?
No, we do have something on one of those other things about printing.
Oh, let's
whether
cover that
extra
right away.
lines appear on there if they are on his graph.
Oh, yes, yes. If you add extra lines, meaning you turn on some of these other lines like shares outstanding or book value per share or free cash flow per share, and then if you want to print this into the two-page traditional SSG form, we can click print and two-page stock selection guide. You can add some of the other features, except this last one that's only shows for me. You can add notes, the audit report, or quarterly growth trend data. Let's take a look at what the PDF looks like. It's gonna create a PDF that I'm going to open, and there we see the shares outstanding that I showed, the two-page form. All right, looks like we need to figure out why free cash flow per share is not showing up on there. All right, I mentioned notes. There are some notes that other people have put in for this company. You can write a note too. You say, my judgments sales 12, EPS 11, high PE, what I do, 37, low PE 22, and save your note. Now, maybe this note could be helpful to the community. In that case, you can share it as a community note. I see staff note because I can make a staff note that everyone sees. But if I share it as a community note, it is also in yellow. And if I don't want to see any community notes, I will only see my note. I can also change my note away from a community note to my study note. And I can print those out. When you go to print, you can print all notes, only mine, or community notes, or community and staff notes when you print. You might see the word audit report here. We have an audit feature which highlights things to be reviewed. And if there's nothing there, it's past all the audit features for that. I only have nothing, well, I have nothing for this company on historical data, which is one of the reasons I picked it. For forecasts, it's actually asking me to double check. Do you really want to rely upon investors paying more than 30 times earnings for this stock in order for you to make money? And my high PE forecast was 37. I'm going to go back and double check and say, you know, for the last 10 years, the market has valued this at more than 30. So yes, I'm okay. It doesn't audit items don't mean you have to abandon your work or abandon the company, but they should be a double check for you. All right. Anything else before we wrap up?
We do not have any outstanding questions at this point.
All right, I'm going to go back to our PowerPoint then. And let me just say, if you have any questions or comments, you can write them in to Better Investing, and they will either be answered by our support staff or they will be routed to me to answer. I'm always looking for class feedback, good and bad, and how you might structure or change the structure of how we're presenting our tutorial webinar. That's perfectly fine feedback. And I do want to point out that if you're looking for more on the SSG methodology, not just the tools, you can look at the Introduction to the SSG series in the Video Learning Library. You can ask for a mentor from your local chapter, or there might be a mentor in your club. You can review stock selection guide that we do on the Stock to Study every month in the Better Investing magazine. We also have more tutorials for you to review: the portfolio tools tutorial, screening and stock ideas tutorial. There is a quarterly data on how you can use that to enhance your stock analysis. And sneak peek, we're going to be looking at refreshing that quarterly data class pretty soon here. Also, don't miss our Ticker Talk series, where we're always talking about ways to use the SSG, some foundational items, some research items, and to sign up for those Ticker Talk webinars. They're 3 short presentations in one, along with some stock ideas. With that, Ann, do you have anything else that you want to let the audience know?
No, ma'am. I think we are all set. Thank you.
All right. Thank you for spending your valuable time with us, and we'll see you next time. Have a good night.
Good night.